Today on the Smallcappower Expert Interview, we feature Michael White, President and CEO at IBK Capital. IBK Capital is an independent and privately owned investment banking firm which offers a full range of financial advisory services. Companies serviced by IBK Capital are active in the mining sector, the renewable energy sector, and the technology sector. Smallcappower met with Mr. White in October 2013, where we asked him to tell our viewers more about IBK and his role there.
My name is Michael White, IBK Capital Corp. IBK Capital is a boutique investment bank located here in Toronto, Canada. We focus on mining and metals, and in particular private placements and advisory work. We're celebrating our 25th anniversary in February of next year, so we're very excited about that. We originally spun out of Merrill Lynch, Canada back in 1989.
What is your forecast on the state of the economy for junior markets in the next 12 to 18 months? And how about the short term?
Well, that's a tricky question. Everybody wants to know, are these markets for the juniors, which we all know has been crushed down, will it come back quickly when it decides to come back, or will it be a long, more arduous journey? I tend to think that we will not see what we saw back in 2009-2010, which was a tremendous rebound to the economic difficulties and the sell-off in the junior market. I think we're looking at something more akin to what we saw in 2001-2002. So although a healthy rebound, one that just takes a little bit more time.
Do you have any thoughts on how the pending debt ceiling deadline may affect junior markets?
Well, I think it affects the broader markets as well as the junior markets. I think it will pass as it did before. I think that the government will get its orders or its issues in order, and that we will see a resolution and an increase in the ceiling, and therefore it will pass. We will have obvious volatility before that, and therefore perhaps a stall or a pause before this junior rebound.
Do you think the Fed at any point can cease their quantitative easing program without severe economic drawbacks?
Well, we saw Bernanke test the marketplace, and when he tested it, interest rates rose, or the yield on bonds rose very quickly. And although he caught many people by surprise when he decided not to taper, I don't think it was much of a surprise because of that reaction, that increase in the yield, which was well beyond what he had expected. The U.S. has themselves in a difficult situation. They have to pay for certain things. They have to pay for their deficit, and therefore they have to issue bonds. At the same time, though, they are telling industry and telling really the people of the world that they'll keep rates low. And it's very difficult for them to promise to keep rates low if they are not the buyer of last resorts for their own treasuries. So I would say that they're in a situation where they cannot begin to taper in any effective way or major way at this point in time.
Do you think the price of gold or silver has hit rock bottom? Do you think investors should be investing in those commodities now?
I think they have hit bottom. I think that they've hit bottom for the very simple reason that every ounce, when you look at gold and when you look at silver, every ounce that comes out of the ground is necessary today. And the industry cannot perform as it should and produce those ounces if we see prices much lower than we see today. And it's the same thing that we saw back in 2000-2001 when gold dipped down to $250 an ounce. Back then you had an average cost, or an average cost on gold to produce that metal of just below $300, and we did not see gold sit below that point for very long. So right now, depending on who you talk to, the average cost, the all-in cost for gold is between $1,100 an ounce and $1,400 an ounce. So we're there, and we're at a point right now in time where if this persists, then you will have mines that curtail production, you'll have mines that close. The effect being you're producing less ounces. And right now you have a COMEX market that we calculate is 125 times the size of the physical market, and that needs to be sustained. And so you look at it as every ounce that's in the ground, that's scheduled to come out of the ground, has to come out of the ground in order to support that larger futures and derivatives market. And therefore you can't persist at these low prices.
Are you currently seeing more or fewer financings and M&A activity compared to this time last year?
Q1 was slow. It was very slow. We saw a pickup in Q2 of this year, broadly speaking, across all sectors, not just mining. And so that's healthy. I mean, that's a nice indication that businesses are out there and they're looking to do activity. They're looking at buying assets or buying divisions or sectors of companies, and I think that's healthy, and it shows some confidence in the global economy.
What are the type of catalysts that need to occur to bring the junior markets out of their current slump?
I think we'll need a few things to bring the markets out of their current slump, but underwriting all these reasons is simply we need to show that this sector the junior mining sector can make people money. In other words, you can invest in one of these stocks and it can provide you with a nice healthy capital gain, and that's ultimately what brings these markets out of a slump. And the catalyst for that can be many reasons or a combination of reasons. One, metals prices. We want to see metal prices do well in the future. They don't necessarily have to roar ahead of where they are today, but we need confidence in those metal prices going forward. So therefore you need some confidence in, say, the economies of Asia, some confidence in the economies of the US and in Europe. What we also need to see, I think, in the junior space is we need to see more exploration success. And more exploration success can come in the form of discovery, just pure raw discovery, where these exploration dollars, although thinner today than they were in the past, but these exploration dollars amount to a discovery of whatever the metal might be. And then the market obviously would rally behind that discovery as the value of the project increases. But a good discovery, not a marginal discovery.
Can you tell our subscribers what you think are the best growth sectors to look at?
I'm a big gold bull, so I do believe, as I've said, that the gold market has been crushed down in terms of the equity markets, and I believe that we'll see a good, strong rebound. It may be spread out over some time, over a year or so, but we'll see a nice, healthy appreciation in that market. So I'm bullish in that sector. Silver, obviously, as well. Platinum and palladium, the precious metals. But I also believe that the world continues to expand, and that we can see that today in inflation that I believe exists today, contrary to what some of the CPI baskets may have in them and what they're showing. So I think that the metals market is a great place to be investing in today. It's just a wonderful opportunity and time to be invested in the metals market.
Are there any particular companies that you like that you could mention for our viewers?
Yeah, on the technology side, I'd like to mention Poet Technologies. They are developing a gallium arsenide semiconductor technology. It's a technology that can work both in the optic and the electronic world. It can actually merge optics and electronics onto a single semiconductor, single substrate, which is an enormous advancement. But it also is highly advanced just as a Type 3.5 semiconductor in terms of its technology. It's a very elegant technology that they're currently trying to reduce down to 100 nanometers in size. It's developed out of the University of Connecticut, and BAE is the company that's validating this technology, and they have validated very critical aspects of this technology. So right now the company is on a drive to reduce its technology size from 900 nanometers down to 100 nanometers. And what we're hearing from industry is that's a critical point. If they can show that it performs effectively, the PNN channels, as an example, perform effectively at those sizes, then they have solved a critical issue that the Type 3.5 material semiconductor designers and developers are having today. So that's one that trades on the Venture Exchange. It's a Canadian corporation, but the work is done out of Connecticut, as I mentioned, and it's just a wonderful technology to watch, because the semiconductor space is an enormous space of hundreds of billions of dollars in size, and it's one that needs these types of elegant solutions moving forward, because there are some that argue that silicon, certain aspects of silicon, are pushing the envelopes of their size and speed, and therefore that opens an opportunity for these Type 3.5 materials to start populating more functions in the computing world, if you will. So we're keeping a close eye on that, and I've got to say, for full disclosure, we are owners of the company as well. We have conducted investment banking services for Poet Technologies in the last 12 months.
Thanks for taking the time for the interview, Mike.
Thank you.
Don't forget to subscribe to our daily newsletter for more of these expert interviews, CEO videos, daily stock picks, exclusive research, and investment ideas. Smallcappower.com, investment ideas and research.